asked me about above the line and below the line deductions. I know this is one of the challenges you face when you're trying to come up with your taxable income. Remember last time I told you how we come up with the taxable income? In the previous video, I said we get your gross income, the income you received. Then we remove what we call above the line deductions. At that point, what we have is your AGI. So from your AGI or adjusted gross income, we remove what we call below the line deductions. From that point, what we'll get is what we call taxable income. So someone came from that background of knowing how we come up with taxable income to ask me, what do you mean by above the line or below the line deduction? So above the line deduction, we mean deductions like health savings account, student loan interest, alimony, things like what is that, moving expenses, that's if you are in the military, and also things like educator expenses. We have so many other, but those are the most common above the line deductions. Then we come to below the line deductions. Here we basically talk about two things: standard deduction and itemized deduction. Now for 2025, we have additional below the line deductions like no tax on tips, no tax on overtime, and also the car loan interest. Those ones who have car loan interest above $10,000 and also bought in the US. So if you want to really understand your case, we need to know what expenses do you have that we can tell you this is above the line, this is below the line. Whatever I'm giving you is common, but when it comes to your case, you have to go into specifications and look at specific issues, specific matters, and how they apply to you. Another person asked about QBI, qualified business income. Here we look at only 20% of your QBI, and QBI is same as net profit. Think about it as net profit. However, you must not be a C corporation. If you are C corporation, you are not eligible. For you to qualify or to benefit from QBI, you must be sole proprietorship, you must be a partnership business, you must be a trustee, or you must be an S corporation. Hello? On that very point, you must understand that when you talk about trusts, not every trust, we shall talk about trusts in their own perspective. There is what we call revocable and irrevocable trusts. We shall see how everything applies or behaves when it comes to tax purposes. So for your matter, QBI will be 20% of your the deduction is 20% of your QBI, and that is 20% of your net profit. However, special rules apply when it comes to real estate rental businesses. There is something that changes when it comes to QBI. I want to see your question. I want to see your matter specifically so that we answer accordingly to that particular matter. Thank you.